Hey everybody, happy Monday to you all. Just want to start out saying that I've been in the insurance and financial services industry for about 28 years now, and I might not be the sharpest knife in the drawer, but I can certainly spread butter. So also I want to let everybody know politically where I'm at. Most of my adult life I was actually a left-leaning Democrat, although I had some right-leaning fiscal responsibility. So I was basically, I guess, in the middle. So in my later years here, I've re-registered as an independent, and I'm more middle of the road, and I think everybody should be. In fact, I'm going to take a stretch here. I don't think we should have two senators from any one party from any one state. I think it ought to be a mix of both, one from each party. But anyhow, the tax reform bill, and it's probably a good thing. I don't have a problem with it really, but what I do have a problem with is the fact that they don't really tell you all the real good things about it or bad things about it in any case. But so one of the things is the 20%. Reducing the corporate tax rate to 20% is a good thing, because that will bring companies back into the country and probably create more jobs. And as we all know, it's no-brainer that a lot of people working actually drive the economy. That's what's made this country great all these years, is working people driving the economy. But on the flip side of that, the Republicans are constantly saying that the trickle-down economics has worked. Well, study after study has proven that trickle-down economics does not work, and I'm going to tell you why. Because here's a corporate entity goes something like this. They bring in the money, they pay expenses and salaries and what have you. They maybe make capital purchases, which does have a trickle-down effect because they're buying things from other companies. But then the money from there goes to executive bonuses, usually substantial bonuses, and then what's left over goes in the form of dividends to stockholders. Most of those stockholders take and reinvest that money into other companies' stocks and bonds for their own gain. So the trickle down economics is filtered. There's very little trickle down, and a study recently that I read showed that most corporations really don't intend on doing a whole lot of hiring because it's driven by market demand, and so we'll go from there. But now on the flip side of that, the 20% is really going to help the so-called mom and pop shops or sole proprietorships, partnerships, LLCs, those kind of businesses that have pass-through income to their bottom line. Even that has a couple issues, and I'll get into that here in a second. Because basically, those companies there, almost dollar for dollar they bring in, they either reinvest it into their company and in their employees, or they're buying services in their local community. So that money does, in fact, trickle down. So the one thing I'm going to show you a slide here on how that 20% works and how a lot of people are kind of getting fooled on that, and I'll just talk you through it. On the first top of the slide here, you'll see that currently at the tax rate of 38%, you have income coming in, and then you have all these itemized deductions coming out. And this is exactly why Warren Buffett and some of those richer folks say they pay a lower effective tax rate than their secretaries do. It's because of the deductions they get. So they're paying the 38% based on a much smaller number because of the deductions. Now when we look at it, what it's going to be at the 20% rate, when these guys lose most of their deductions, they're paying, you have the income coming in, but they don't have the deductions coming out. So it doesn't take a math scientist to figure out that 20% on a higher number adds up rather quickly and could be substantially more than 38% on a lower number. So that's kind of what I wanted there. Now, how much will you see in your check, the normal working person? Well, if you're making probably up to around $75,000 a year in that neighborhood, the estimate is around $20 a week. So you can take an extra trip to McDonald's if you like to. Take the family out for a nice Big Mac or a bunch of chicken nuggets. It's up to you. Ought to help the economy a ton. So let's see. After Christmas, I think what we'll do, I want to get into a couple other things, but Paul Ryan said this morning the next thing they're going to tackle after the holidays, after the first of the year, is entitlements. Well, I got some strong opinions on entitlements because I know from other posts on Facebook that everybody pretty much feels the same. If the government would have kept their hands out of Social Security and Medicare and the such, there'd be plenty of money there. So, but we're going to get into that after the holidays, and so hold on to that. And another thing that I've been doing some research on, and we'll get into a little bit, is the net neutrality issue. A couple of weeks ago, I didn't have a real opinion because I didn't have a whole lot of knowledge on it, but I've been digging into it, and there are some good arguments on both sides. But listen, take care. Have a Merry Christmas, Happy Holidays. Hope all the best for you and your families, and see you soon.